All right, Ken Range Theory Trader back with you on another video showing you how to legally rob the currency market. So let's not waste time and get right into it. So what this video is going to cover is how to legally rob the market by planning. Okay, we're going to cover how to plan like a thief. Obviously, disclaimer, we're not advocating stealing anything or anyone. It'll may just seem that way. We're not advocating that, all right? And then I'm going to explain to you what to look for using this method and a chart review, some real examples here showing you how I'll plan for the week. So, how to plan like a thief. Why do I use this parallel? Because the best thieves, okay, the best thieves do not actually use any weapons, okay? What do all good thieves have in common? They are meticulous planners. They will watch a target or a mark for days, weeks, months, and sometimes even years, depending on what their target is. Okay, they'll watch someone's routine, they'll watch to see when they leave to go to work, etc., etc. Not to give away, too many tips or anything like that. I'm not a thief myself. The concept, though, is that when they see the pattern and know the pattern, then they'll know when to act. They are meticulous planners. So we as traders should adopt that same mentality to say, okay, if I'm watching an instrument, in this case, the currency market, I want to look for a certain pattern recognition at a certain time of day and see if I can create an opportunity repetitively over and over so that it's going to feel like you're actually robbing or extracting consistent profits from the market. So I'm going to show you how I plan out the week using the candle range theory. So these are the main things that I look for. And in this example, we're going to look at how to plan a week, okay? Plan an entire week using number one, money candles. All right, money candles. And what is a money candle? If you don't know what a money candle is or what the candle range theory is, you're going to need to pause this video, go to the link in the description, and check out the video just called What is the Candle Range Theory? That is going to break that down further for you. So I'm looking for the candle that pokes below a range and closes back inside it. Okay, that's it. And like I said, this is the daily chart. Number two, I'm looking for ATR candles. These are going to be the candles on the chart that are going to show as either blue or yellow. If I see a blue candle, that means I'm going to be looking for a long bias, or a yellow candle, that means I'm going to be looking for a short bias. And then the last thing I'm going to be looking for is a small daily range. And I'm going to frame that range for a reversal. A small daily range is going to have a candle body that is 50 pips or less. So today is a Saturday. And so going into Monday, I already have my week planned out for the pairs that I'm watching and the pairs that I'm ignoring because I'm thinking, okay, how do I want to frame the week? And when I see the pattern take effect, then I'm not going to hesitate to pull the trigger and go ahead and get into that trade. So here we are on the daily chart. Let's go to the charts and see what we got here. So let's go to the chart. And I'm going to go through and just tell you out loud how I look at these pairs that I'm watching. So let's take this a little bit bigger here. Obviously, the market is closed with it being a Saturday. And we're going to go through our checklist just a couple times just to show you what we're looking for. So as we go through each pair, I'm just going to go out loud. So number one, I'm looking at Swiss yen. Do I see a money candle? Do I see a candle that poked below a range and closed inside of it? No, I do not. So I move to the next one. Is this an ATR candle? Is this candle right here, I'm looking at Friday's candle, blue or yellow? No, it is not. And the last thing I'm looking for is a small daily range. Small daily range doing 50 pips or less. I'm using the ATR indicator here on the bottom of the screen right here. I'm using the candle size to see if Friday's candle is 50 pips or less, and it is not. So because it does not have either of those three criteria, then I will ignore Swiss yen for Monday. All right, so then I go to the next one. And it's the same process over and over and over again. So with Swiss yen here, do I see a money candle? No, I do not, because this closed outside of the range. All right, this candle right here, this Friday candle, this is the candle I'm really focusing on. Now, do I see a ATR candle for Friday? I do not. This is the ATR candle, but this is not a money candle because it closed below the range. All right, and then do I see a small range? This daily range here, this body, this candle body is 60 pips. So I ignore that pair and go to the next one. Okay, there is no money candle here. It is not an ATR candle since it is not blue or yellow. And the candle body is 91 pips from top of the body to the bottom of the body, not the wicks, just the body. So we ignore euro yen. Now for the next one, which is CAD yen. Okay, it is not a money candle in this case, only because while it did poke below this daily candle and close inside of it, I do money candles based off the ATR candle, this yellow one. So the candle has to be blue or yellow on the daily and then has to poke above it and close inside of it for it to be a money candle. So this Friday is not a money candle and it is not an ATR candle, but what it is a, go back here, small daily range, because this pip range here, see it's a doji, is only 6 pips. So what I'll do is I'll mark the top of the range here and the bottom of the range here. Okay, these I do manually. There's no indicator to actually mark the ranges automatically, so I do these automatically. And then what I can do is set a price alert for the top and the bottom, just so I'm not sitting at the chart all day on Monday. So if price hits up here and closes inside of it, I'll go short. And if price goes down here and closes up, then I'll go long. Okay, and this total range is, that could be 100 pip profit based on if price goes outside the range and closes back inside of it and then clears the other side. Okay, so I don't go into the next week having a bias. I'm just waiting to see. I'm going to react to whatever the market shows me. So it could go long, it could go short. I don't know, but I don't try to predict it. And then I can also just mark it like with a blue tab either way. Okay, so now that we understand that and we've got a clear example, let's fly through the rest of these real quick. And this doesn't really take long at all. So we don't have a money candle here. We don't have an ATR candle, but we do have a small daily range because this is a 23 pip range. So I mark the top, mark the high, mark the low, and I'll just add it to my blue chips and go to the next one. Okay, no ATR, no money candle, but this is a small daily range because it's a 26 pip body. Mark the high, mark the low. I'm not going to set price alerts because that would take too long. I'll do that on my own time. But simultaneously, I think you're getting the point here. And I just go through the rest of these pairs and see. Okay, so here we have another small range where this is just 1 pip. So I'll just mark that. I won't mark that. Of course, you just mark the high and the low, but this pip body is very tiny. And I like to see where the close of the candle is near the range high or low. That's ideal instead of being in the middle, because it wouldn't take much of a stretch for price to go. Let me get this tool here. I'll just use a trend line. For price to go down and then up like that. That would be ideal for me because it closed closer to the bottom of the range than all the way up here at the top. Okay, if that makes sense. Okay, so we're going to remove that. But yes, but I'm going to mark that and keep going. So now we're on Euro Aussie. Okay, so this is not an ATR candle, this is not a money candle, and it is not a small daily range because this range is above 50 pips. So we go to the next one. So we have pound Aussie, and I've already actually marked this one. And so this is a small body of 12 pips. So we'll mark the high, mark the low. And I do see where the close is close to the low, so I'd be happy to set a price alert down here. And ideally, I'm not saying I'm going to go long. I'm just saying that for Monday, it would be nice if price could go outside the range and then close back inside of it on the 4-hour or on the daily chart. I'm almost done, so let's keep going here. So this is not an ATR candle. This is a small candle body, though. Not a money candle either, obviously, but small candle body. So I'll just mark that because it's less than 50 pips. It's right at 45 pips, so that's good. And it closed near the low as well. So the odds are pretty high on that one, that it could poke below the bottom of the range and then shoot back up. But we won't know until the next day comes, which is Monday. So we'll mark that and keep going. Okay, so same here, not an ATR candle, not a money candle, but this does have a small body of 8 pips. So we'll mark that. That was Aussie New Zealand. For pound New Zealand, same principle, small candle body. So we'll mark that, and we will just mark the range, high and low, and wait to see what the market will show us. Euro dollar, none of the above. This is not an ATR candle. This is not a money candle, and the body is more than 50 pips, so nothing there. Let's see. Here we have not a money candle, not an ATR candle, but it does have a small candle body of 19 pips. So we mark that. And again, we just mark the range high and low, and then it's just a waiting game from there. Small candle body on Aussie New Zealand. I'm sorry, Aussie dollar. So we will mark that. Pound dollar. And Friday was non-farm, so that's why a lot of these dollar pairs have small bodies. The news just kind of made it whip back and forth. But again, and we got close to the bottom of the range here, so it'll be good to see if price could just dip below the low and then close back inside of it and keep going up. That's what I'd like to see. Let's see for CAD, dollar CAD. We have another small body. And remember, let's remember our rule that small bodies lead to big bodies. Okay, so but this is a small candle body of only 14 pips, so I will mark that range as I've done previously, the top and the bottom. Let's see here. We have another small body of 25 pips, so I will mark that. Pound CAD. This one has a 67 pip body. It's not an ATR body, not an ATR candle, nor is it a money candle. So that's just non-trade, no trade there. Let's see. This is a 95 pip body, not a money candle, not an ATR candle. So we skip Euro CAD. This is a small candle body for New Zealand CAD. So we'll mark that. Okay, so this is right at 50 pips. So, but I'm going to leave this alone only because it's 50.9, so that's 51, and I just like to see things, if it's right at 50, I'm okay with it. So I'll skip that one. Not seeing any ATR candles. I wish I had one to show you guys for Friday, but there's just not one here yet. Aussie Swiss, we have a small candle body on that one. It's 19 pips, so we mark that. Small candle body on Euro Swiss, we can mark that. Small candle body of 13 pips on New Zealand Swiss, we can mark that. Small candle body on Pound Swiss of 34 pips, so we can mark that. And lastly, Euro Pound has a small candle body of 25 pips, so we can also mark that. All right, so when we go through our blue list, we have quite the selection to choose from for Monday. Ideally, obviously, you're not going to trade all of these. You're going to trade the one that's going to give you the best and clearest setup that also offers the smallest stop loss. So ideally for these trades, what I'd like the most is pairs that close near the bottom or top of a range. In this case, it will be this one. Because see how price is here and it has all this room to the upside. So if it comes down below and closes at the range, this is a potential 144 pip profit. That's what I like to see right there. Whereas if it closed in the middle, also this one here is good. Close near the bottom. So obviously with the top of the range being here. If price dipped below the range and closed back inside of it, this could be a potential 70 pip profit, which is good, and so on and so forth. But seeing the closing price near the bottom is good instead of in the middle where it's kind of a 50-50 crapshoot of where price could end up. So all of these were primarily small candle bodies. Like I said, I wish I had an ATR candle to show you or basically a money candle. But what I can do is if I go back a little bit, I can show you a brief example of how I would mark an ATR candle, which is more or less like this. Okay, you would just mark the high and the low, if this were the case. And then you would simply wait for the money candle to develop, which would be a break above the range and a close back inside of it. This isn't exactly a money candle because it did close outside. Sometimes people still take these because it's not a very strong breakout, but it will just depend on you. And looking at the rest of the week, how it played out, that obviously did not play out because the price continued to break outside of the range versus another pair. Let's say, see if I can find one on one I did not mark. just so you can see how it would look. And that one does qualify, but I want to find one a little cleaner. Let's try pound CAD with an ATR candle. Yeah, this is right here is perfect. So you have the candle range high. Remember, this is still the daily chart. Candle range low here, right? And I'm just going to do the replay for the sake so you can see how it will play out. This is December 17th. Okay, so this will be the end of one day, all right? So we mark the high and the low, wait for the money candle, which would be the following day. And there it is. See how it pokes above the range, closes back inside of it. We take our sell. You know, it's just a paper trade, not real. All right, and then stop loss obviously goes down below, down at the range, candle range low, and boom, it hits. All right, so that's how that would work. And that's pretty much it. So that's how you can legally rob the Forex market, so for repeated profit. So you just want to be sure to master your system and just look for the same thing over and over and over again. All right, so I appreciate your time and attention. Don't forget to like and subscribe to the video. Don't forget to check the links in the description if I went over any terms that were not familiar to you. And I hope you have a great rest of your day and take care.